All right, hi guys, how you doing? This is Zahir from Sublime Trading. Just doing a random live stream. So if there is anyone on here, I know it is. Normally I schedule these, and I've just gone straight on live. So if you are on, do drop me a hello message. Let me know where you are, where you're from, and let me know that you can hear me and you can see my screen okay as well. So we're going to go through a few charts today, mainly looking at the major indices. So we can see that we've got the dollar index on here. We'll also be looking at gold, the S&P 500, the FTSE. In fact, we'll probably start on the S&P 500, go down to the FTSE, go down to the dollar index, and then we will end up on gold. And then if there are any questions or any stocks or assets that you want me to have a look at, then drop that in the chat box for me. Okay, so before I jump into the charts that I want to look at, let's have a quick breakdown of the setup that I have here in front of me. So this is a three-screen setup that I've got. This is the same setup that I use across all my analysis, regardless of whether it's a US stock, a UK stock, a commodity, or a currency pair. It's the same setup because for me, a chart is a chart, and I am a trend follower. So what that means is that I look for the big moves in the market, hence why I use the higher time frames. So as a trend follower, also, it's really important to understand that what I wait for is a confirmed direction in the market, and then I go in that direction. So I'm waiting for the market to confirm a bullish direction, in which case I buy into the market, or I wait for a bearish direction, in which case I short to the market. And if there is a mixture of bullish and bearish factors, then I simply stand aside, because for me, that is a low probability environment. We want high probability environments, and patience is a key skill. It's a skill that's regularly overlooked and underappreciated. But if you nail that skill of patience, you'll be handsomely rewarded. So let's start with the three-screen setup that I have here. I've got the monthly in the top left, the weekly in the top right, and the daily time frame down here across the bottom. So if I just open up the monthly time frame, I've got this indicator here. So these are the tools that we have developed. We've used PineScript, which is the language within TradingView, and we've developed these tools. So the green is the high of last year, and the red line here is the low of last year. So this is the highest point of 2021, and this is the lowest point of 2021. In an ideal market, I want to see price trading above the high of last year for it to be a bullish market, or below the low of last year for it to be a bearish market. At the moment, this is the S&P 500. We can see that it's trading inside the high and the low of last year. So that for me is more of a consolidation. Okay, so this is more of a sideways market rather than a full-on bull market or a bear market. So it's really, once you've got these markers, what it helps you to do is remove the noise and the opinions that you find on social media, which are regularly wrong, and it forces you to focus on price. Remember, the truth is in the charts. The truth is what price is doing. That's your number one indicator. Not your thoughts, not your beliefs, not your favorite influencers' thoughts or beliefs. The charts. Price action itself is your number one indicator. So we can see that price is trading rather inside the high and the low of last year. So this is why I'm waiting for the S&P 500 to really make a move. Now, if you move, by the way, these black lines down here at the bottom, these are all key levels of support and resistance. Again, there's an algorithm behind these tools. And what that means is that the software will automatically detect these levels and plot them for us. So we don't have to spend hours trying to look for these levels and then marking these levels manually. It's just a waste of time. When there's software that can do that for you, you want to take advantage of that. But where human discretion comes in, where the final decision comes in, is when it comes to choosing the assets that make it into your portfolio and managing those assets. You want to do that manually. You don't want to rely on software or technology to do that for you. Okay, the best combination is technology to do all the boring work, so scanning and drawing support and resistance lines, for example. You want the technology to do that, but you then want human discretion to shortlist your stocks, choose the right stocks, add them into your portfolio, and manage that. And when you've got a good system in place, you will have this process down to a few minutes each week. This doesn't have to be a long, difficult process. Okay, so that's the monthly time frame. Now, on the weekly time frame, what I have is the black line, which is the 200 simple moving average, and the orange line, which is the 50 simple moving average. And I have a trend filter as well. If you notice that there's green bars, red bars, and gray bars. So when the trend is bullish, the trend filter is green. When we're in a sideways market, there'll be a lot of gray bars. Hence, another reason why this is really a sideways market and not a full-on bear market. You can see, yes, okay, there's red bars because the market's been declining, but look at how much gray there is, suggesting that the market hasn't fully confirmed a full-on bear market. And that will be confirmed when price breaks below the 200 simple moving average. Now, if I just compress the chart, and I'm just going to go back to this period here. This is 2000, 2008. You can see, if we just look at the bear markets of 2000 and 2008, this is what you call a full-on bear market. Price broke through the 200 simple moving average and we had a decline. Then it recovered, found resistance back at the high of 2000, and then it declined again. So this was the meltdown, the tech bubble when it burst in 2000. This is that decline. And then 2008, we had another financial meltdown. This is a decline in 2008. Since then, since that low point of 2009, the market's recovered quite nicely. And when it broke above the 200 simple moving average in 2010, it has used the weekly 200 simple moving average as a trampoline or a support level to bounce to further highs. So we can see that we had a bounce here. And then there was this initial climb, which, if I remember off the top of my head, was something like 80%, 80, 90%. Then we had another correction towards the 200 simple moving average in 2016. Another bounce of, I believe it was around 60, 65%. Then another correction to the 200 simple moving average in 2018. And then we had this bounce to the upside. Now I'm going to ignore this because this was Corona. And Corona is a black swan. And so usually what happens is a black swan event, it gets absorbed into the market. And then what the market was doing prior to the black swan event is what usually happens once the black swan event has been factored into the market. So I'm going to ignore this. So the bounce from 2018 to the high of 2021, that is 104, 105% rise to the upside. Hi, Casey. Good to have you on the stream with me. If you've got any questions, please put them in the chat box. Any stocks, any assets you'd like me to analyze, please put them in the chat box. Okay, so since this high point, which was the end of last year, start of this year, we've had a decline. But look at where the market, this is the S&P 500, look at where it's declined to. It's come back down to the 200 simple moving average. And we're now seeing a bounce to the upside. I believe it's about a 12% bounce so far. So it's very early days. What we want to see is the market continue. We want it to move through this orange line, which is the 50 simple moving average. And we want my trend filter to turn green. Once we have that, we have confirmation that we're starting to see bullishness in the market. For now, the market could fail at this point and it could start reversing back to the downside. So if you start jumping into the stock market at this point, you leave yourself open to a fake breakout or a reversal in the market. So a little bit of patience needed. We want to see strength. We want to see price move through the orange line, which is a 50 simple moving average, the trend filter to turn green, and then further momentum towards the current all-time high. Remember that patience I mentioned at the start is essential. Allowing the market to do its thing and then start developing momentum and then establishing an environment which gives you more chance of making money than losing money. This is really what investing is about. People tend to overlook that and they go down the route of day trading and trying to chase money every single day. And that's how they end up losing money. Day trading has been sold as this sort of sexy way to quick riches. And it's often how people lose significant sums of money. So patience, guys, because patience is rewarded, right? Hi, Ibrahim. I think I have hopefully got I think you might have your first and second name the other way around in your trading view name. But if I've got that wrong, please correct me. Yeah, we can have a look at Bitcoin for sure. Everyone's talking about Bitcoin at the moment. And it's a really good question because remember, we're investors. And what does that mean? What that means as investors is that we shouldn't be attached to any one asset or any one asset class. It's a really important concept to understand. As an investor, you want to move to where the money is. So if the money is not in crypto right now, that's fine. Where is the money? Well, it could be in stocks, it could be in currencies, it could be in gold. And at some point, the money will disappear from stocks, gold, commodities, and it may flow back into cryptocurrencies. So it's all about patience. It's all about identifying the high probability environment in whichever asset class you're looking at, choosing the best assets in that asset class, taking your profit once the money runs out, moving to another asset class. Okay, so it's that circulation of money that you want to follow. So yes, we will look at Bitcoin in a second. Okay, so that's the weekly time frame. Now let's look at the daily time frame. The daily time frame is really important. First of all, this momentum to the upside that we can see on the weekly time frame. It's on the daily time frame, but crucially, it's below the 200 simple moving average. And if we look at what the market has done since the high of this year, the highest point of this year, it's broken through the 200 moving average, and it's used it as a resistance level, which has forced price to the downside. So the question is, what are we going to see at this point here? This is really, really important. What are we going to see at this point here? Are we going to see the same as what we saw in August, which is price find resistance and be forced to the downside back towards this low point of October? Or are we going to see price find support maybe around the 20 simple moving average? And are we going to start seeing this momentum back to the upside? Now, the end of the year, December, is synonymous with what is known as the Santa Claus rally. It doesn't happen every year, but when it does happen, it moves very quickly. So we could potentially see a very strong end to the year, and we could see momentum to the upside. Ideally, that's what I want to be looking at because I still have a few stocks in my portfolio that are performing well. McKesson, ticker symbol MCK, we'll look at that in a second, is doing very well. And I've got a whole number of stocks that are starting to break out and print new highs that are on my watch list. But as already mentioned, there is an element of patience here. For now, I'm standing aside and I'm waiting for that right setup. And once again, that right setup is price to move through the 50 simple moving average on the weekly time frame, my trend filter to turn green, and on the daily time frame for price to move above the 200 simple moving average. Once I have that, then we are in an environment where I will start considering long positions. Okay, so that's the stock market for now. That's particularly the S&P 500. Let's have a quick look at what's happening on the FTSE. Now, the FTSE is looking quite interesting because if you look at October and November, this is a monthly time frame, we've seen good movement to the upside. Prices now, if I just compress the chart, we can see that the FTSE is testing these current resistance levels, which form the all-time high. So if price manages to break through this resistance level, which is from 2019, and this resistance level, which is from 2018, if we see enough momentum to the upside and it starts pushing through these resistance levels, then the UK stock market as a whole may start pushing further. So it's really important to see what the FTSE does over the coming days and weeks. If we look at the weekly, it's above the 200. Let me just open that up. It's above the 200 moving average. It's above the 50 simple moving average, and the trend filter is green. Now, the downside to the FTSE is that if I just compress the chart, we can see that it's really been stuck in this sort of consolidation, really. So we've seen price at these levels before where it's turned green, only for the market to reverse. We saw it here, it turned green, the market reversed, so it's really struggled to break through these resistance levels ahead. But we are seeing bullish momentum. So will it happen this year or next year? Remains to be seen. Also on the daily time frame, if you look at what's happening, price above the 200 moving average, the trend filter is green. Strong day today, which has continued this bullish momentum. So we are in a bullish trend on the FTSE 100. It's just a case now of how far this bullish momentum will take price. Okay, let's move to the dollar index. So the dollar index is very interesting because the dollar index, if we just go back to earlier this year, the dollar index was stuck in this long-term consolidation, going all the way back to March of 2015, just a sideways market. Prior to that, there was a nice trend to the upside. It was about a year long. If we take it, that's May 2014. If we take roughly the base here, May 2014, to the high point here, which is March 2015. So we had a good run to the upside. After every trend, the market consolidates, and it's been in consolidation since that high point of March 2015. Then we eventually had a breakout earlier this year, which was in June, and we had bullish momentum to the upside, but it's been short-lived and we've seen a reversal. Now, what we want to see is whether price bounces off this support level and we see a move back to the upside, or whether the market moves further back into consolidation. The dollar index is your indicator of the forex market as a whole. Just like the S&P 500 represents the stock market, Bitcoin represents the cryptocurrency market. Gold, if you like, is often a good indicator of what is happening in the commodities market. The dollar index is your indicator of what is happening in the forex market. So if the dollar index is trending, we can look for currency pairs that are trending. When the dollar index is pulling back or consolidating, then generally the forex market is in consolidation. And that's what we've really been seeing in recent years. The forex market just whipsawing all over the place, and why generally forex traders, particularly day traders, lose a lot of money, because they are getting caught up in this sort of whipsaw movement up and down and just end up making money, losing money, making money, losing money, and then just really end up losing it all. You want to stay away from that sort of approach. This is the weekly price above the 200 and the 50 simple moving average. Quite a drop to the downside. The trend filter has turned red, suggesting we could see further weakness. And if you look at the daily time frame, the weakness since September, I believe, the high point in September, has taken price back to the 200 simple moving average. So where are we? Well, we have a mixture of bullish and bearish factors. The trend overall is bullish, given the fact that it's been heading to the upside. It's broken out of consolidation, but the short-term movement in the last couple of months has been bearish. So we have a mixture of bullish and bearish factors, and hence why currencies like the euro dollar, the pound dollar, they've all just been whipsawing all over the place, and why people really aren't gathering any momentum. Okay, and then the final chart we will look at is gold, before I then move on to Bitcoin. So if you look at gold, now gold is a very, very interesting chart. Gold and commodities in general, they tend to follow this mantra, which is, hi Sauda, I hope I'm saying your name correctly. I'm looking at gold now, okay? So you've come in at the right time. I'm looking at gold and we can do some analysis together, okay? So if we look at gold, and if we go back to, if I just compress the chart, gold was in this consolidation. If you look at this point here, long-term consolidation, and then eventually in 2005, 2006, gold broke out, and it went from around $400 to just short of $2,000 in 2011. So you're looking at a strong run. Now, commodities follow this expression. The longer the consolidation, the bigger the breakout. And commodities tend to trend for very, very long periods of time. You can see gold, even if you take gold from this point here, 2001 up to 2011, you're looking at a 10 to 11 year trend. But since that point, it's just been going sideways. We had some fake breakouts here. We had a fake breakout in August, another sort of trend or attempt to break out at the start in March of this year. But both of them failed, and the market has remained in consolidation. What you could potentially be seeing is some kind of odd cup and handle, but that has to be confirmed with a breakout. For me, this is just a messy consolidation. And if you look at the consolidation, it's from August 2011 to where we are now in 2022. So you had a 10 to 11 year trend, and you've got a 10 to 11 year period of consolidation. So what does this mean? What this means is that gold is just going sideways. And the right thing to be doing when a market is going sideways is to be standing aside. Now, if you own physical gold, my family's from India. I'm born in London here in the UK, but my family's from India. As you can imagine, Indians have a lot of gold in the family, right? On the wedding day, brides are covered in gold. So generally, there's a lot of gold in the family. That gold will be held in banks and deposits, okay, because it's physical gold. But how much has that physical gold appreciated over the years remains to be seen. If you've been holding gold since early days, potentially you could be in good profit. But gold right now, if you're buying gold right now, you have more chance of it going nowhere to down rather than it gaining any momentum. This is really, really important to understand. Do you want to be tying your money up in gold when the stock market is starting to look interesting? This is the whole, really the whole foundation of good investing. I said it earlier, you've got to identify which assets have the highest chance of returning you a profit over the next 12 to 24 months. Invest in those assets, then take your profit and then invest in the next set of assets. It doesn't matter whether it's in gold, whether it's in Microsoft, whether it's in the euro dollar. What matters is that that is the right asset to be in right now. For me, I follow this formula. I want to invest in the right stocks or the right assets at the right time using the right strategy, right? I want to invest in the right assets or the best assets at the right time using the right strategy. Okay. And what I mean by invest is hold for the next 12 to 24 months, not for the next few minutes or few hours or few days. There's no money in short term trading. You want to think as an investor. You've got to stay true to the principles of good investing. So gold, just a sideways market for now. It's going nowhere. If we want to do a deeper analysis, we can see that on a weekly time frame, it's bouncing off the 200 moving average. If it moves back to this resistance and breaks out, then happy days. We could see price move towards $3,000. But on the daily time frame, we can see that it's struggling rather to break through the 200 moving average. June of this year, it came back down. Then we had a rally, came back down, found some kind of base, had another rally, but it's still below the 200 simple moving average. So for me, gold is really a no-go for now. It's not an asset that I'm particularly interested in at all. The oil positive, they just say it. Look, who is they? If you say they just say it, who is they? Often people in our media channels, on our social media channels, they're clueless. You have to remember that these people have gone through the same education system as we have. Yet these people sit at the top of hedge funds, they sit at the top of broker accounts, they sit at the top of education platforms. This system is designed to keep us, everyday people, stagnant, to keep us poor, to keep us giving money to other people to manage. And that is how people end up losing a lot of money. You just have to look at what's happened with the FTX debacle, how much money has been lost. People jumping into this golden opportunity. We have to look away from that. We've got to be smarter, because once you lose your money, you're back to the beginning. You've got to earn money, you've got to save money, and you've got to start again. All right. So for me, when I started investing in early 2000s, I learned pretty quickly. Look, I made all the mistakes that people make. I did the day trading. I've done value investing. I've tried to be Warren Buffett. I've done all of that. And I've realized that none of that works. What works is what is known as trend following. Okay. What works is applying patience, waiting for the right market conditions, and then going in that direction. That's ultimately what works. That's a simple approach. So for going back to gold, it's a no show. So let's have a look at Bitcoin. Okay, so guys, does there need to be anything more said about Bitcoin? Bitcoin's dropping. It's below $20,000. How far is it going to drop? There's a resistance level here, which is the high of 2019. We could see further weakness towards this level. If it breaks through that level, it could go to $1,000. If it breaks through that level, it could go to this whole support level here. It could even potentially drop all the way. I doubt that, because Bitcoin. Hi Ross. Yeah, good to have you on here. I will certainly have a look at some of the stocks. If you're saying Nifty, are you talking about the Indian index? If you are, I will definitely have a look at that, because actually the Indian stock market is looking very, very interesting. Very interesting. Okay, so I'll certainly have a look at that. Now, if you have a look at what's happening, Bitcoin is just dropping. of course, anything could happen at this point. And what we know is that when Bitcoin moves, it can move very, very quickly. So if you look at this trend here, you're looking at October 2020 to the high point of April 21, covered a lot of ground in a very short period of time. So Bitcoin can move very quickly, but you still want to make sure that you are on the right side of the market, because the market could continue dropping before it actually starts moving to the upside. And this is what I've been trying to preach throughout my streams over the last few days, is that applying patience and establishing the right environments is really, really important. You don't want to just jump in because it's Bitcoin and you sniff an opportunity, because sniffing opportunities can often turn around and bite you in the butt, right? And you end up just losing a lot of money. As an investor, you have to be able to identify the right opportunities, invest at the right time, and then use the right strategy. And what I mean by that is your entry points have to be good, your stop losses have to be good, your risk management has to be good, the way you trail your position, locking in profit, that has to be good so you don't get stopped out too early. You've got to be able to compound. So as a position is returning you profit, know when to compound, which means buy more of the asset. These are all skills that need to be learned when it comes to a strategy. A lot of people have these two things. They think it's just one thing when it's two different things. So what I mean by that is you've got to be a good analyst. You've got to be able to look at charts and do good analysis. But you then got to take your analysis and translate that into profit. And that's where a strategy comes in. So you're a mixture of an analyst and an investor. If you're a good analyst, but not a good investor, you might as well be on TV or work for a bank and get a salary and get paid for it, because you're just an analyst. Now, you may be a good investor, but if you've got crap analysis, you'll never make money. So you've got to be able to add these two things together. You've got to be really good at analysis. And the best way is technical analysis because it's simple. But then you've got to have a good strategy to take out profit from the market. And then also you've got to know when to stand aside and protect your profit. Remember, standing aside is also a position. All right. So going back to Bitcoin, what is it going to do now? Who knows? Really, who knows? Now, remember, Bitcoin is just one use of the underlying technology, which is blockchain. And blockchain has pretty much a huge future. And it's definitely something that we need to keep an eye out on. So I'm not going to dismiss Bitcoin because of the blockchain technology. Bitcoin and blockchain has a huge part to play in our future. So we must keep an eye out on this. But there's still an element of timing involved. Okay, weekly, it's below the 200 moving average. You can see how it's red all over the place, right? It's red on the weekly, it's below the 200 moving average, and it's below the 200 moving average on the daily. Now, it's forming a little bit of a foundation, and we could potentially start seeing a reversal. We could, but we don't know until the market actually reverses. So at this point, guys, the smart thing to do with Bitcoin really is to stand aside and look for opportunities elsewhere. And then once Bitcoin starts rallying, that will then, of course, take the stock market, the crypto market with it. And remember, we also got Ethereum. So Bitcoin, whatever Bitcoin does, Ethereum tends to follow, and vice versa, yeah? Okay, so Ross, thoughts on Nifty Index and playing overseas stocks? Yeah, all right, let's have a look at. Okay, let's have a look at the Nifty. So the Nifty is actually doing very, very well. My family, once again, my family's from India. I'm born here in the UK, so I'm always interested in what's happening in India from a political standpoint, from an investor standpoint. And the Nifty is actually looking very, very interesting. If you look at this low point here, which is June of this year, the market found a base and it's now starting to move to the upside, and it's actually printing new all-time highs. This is extremely important. The market closes above this level by the end of today. In fact, the Indian market is, of course, ahead of us, so this should be closed now. The market has indeed closed. This is a strong sign that we could see further momentum towards this round number, the 20,000 round number. If you look at the weekly, if I open that up, price above the 200 moving average. The trend filter is green. Let me just draw this level here. Okay, if you have a look, let me just draw that red. Price has now broken through the resistance the high from October 2021. It's now printing new highs confirmed today. And if we look at the daily time frame, if I just compress the chart, and if we do that again, we can see that in detail, guys, that price is breaking out and printing new highs. Of course, what we want now is confirmation. We don't want to start jumping in too early because this could be a fake breakout and the market could reverse back into consolidation. So ideally, what we want to be seeing is this sort of move where we have a move to the upside, a pullback. Now it's at this point here where the market could drop into consolidation, but ideally, we want it to see it bounce. Once we've got this confirmation, which is known as a bull flag formation, then we're likely to see a continuation and a strong move to the upside. Again, remember, guys, there's an expression which is the longer the consolidation. Let me just move this out of the way. How to get rid of this? Hide that. There we go. The longer the consolidation, the bigger the breakout. And so this particular index has been consolidating since October of last year. So over a year now. So a year-long consolidation is likely to mean a big move to the upside. So there is one stock that I did sort of come across through some of my scanning and analysis. This is an Indian stock, which is called CG Power, ticker symbol CG Power. I mean, if you have a look at this stock, this is an Indian stock. I mean, it's going through the roof, right? So why would you just out of curiosity, why would you want to be focusing on Bitcoin when you could potentially have a stock like this in your portfolio? And maybe you're not interested in Indian stocks, that's fine. Or then you could have a stock like McKesson, which is in my portfolio. That's up 60%, which is in healthcare. Yeah. So Bitcoin has just been dropping. The market, generally the stock market, we've seen some declines this year, but there are some gems out there that are starting to perform very, very well. Okay. Right. Are there any questions, guys? I'm just going to grab myself some water. I'm quite thirsty, so I'll grab myself some water. If you have any questions, guys, just drop them in the chat box, and I will get back to you. So just give me a second. I'm having some water. I don't know about you guys, but I'm a sucker for sparkling water. I love sparkling water. So if you ever want to give me a present, I'll be happy with some sparkling water. I'm a cheap friend in many ways. All right, can't see any more questions coming through. If there aren't any more questions coming through, I will end the stream, and I will probably be on live tomorrow or maybe towards the end of the week. Okay. I think that is everything. All right, guys. Look, I'm going to end the webinar here, end the stream here. I hope I answered your questions. Overall, for me, I'm standing aside for now, applying patience. Remember, there's NFP out as well on Friday. So you want to be careful of that because NFP tends to add a little bit of noise in the market and you can get whipsawed in and out of position. So, you want to be aware of NFP. Generally, I stand aside. I don't like to trade NFP. It's just unnecessary. All right. Okay, have a lovely rest of the day, guys, and I will see you on my next live stream. Okay, if you want to contact me, reach out to me through direct message. Take care, guys. See you later. Bye-bye.